CNBC TV 18, celebrating 15 years of leadership.
Yet another speed bump for the struggling auto industry. Finance Ministry sources indicate excise duty concessions to autos, capital goods and consumer durables could be withdrawn from the 1st of January 2015.
The holiday mood prevails on Dalal Street. Markets end a range-bound session with minor gains as participation remains low. Midcaps see marginal outperformance. The rupee remains steady above the 63 mark against the dollar.
Crude prices sank to their lowest level in 5.5 years. Brent fell all the way below $57 a barrel but has bounced back. All of this thanks to the supply glut and all of that offsetting concerns over disruptions from Libya.
Political uncertainty in Greece hurts global markets. Shares across Europe and the US trade with losses as volumes remain tepid.
The government reiterates its confidence in getting the constitutional amendment bill to roll out the GST passed in the budget session of Parliament, sticks with its rollout timetable of April 2016, even though a transition clause in the bill puts the implementation on date for states at 12 months from the time the bill is signed into law.
The Defence Ministry is all set to finally give up the 2100 megahertz spectrum. Sources say the Telecom Department could move a cabinet note on spectrum swapping as early as next month.
Even after the transfer pricing setback at the Bombay High Court, Tax Department not losing hope. Sources say Taxman has asked the Centre for its opinion on appealing against the Vodafone verdict. This comes even after the Attorney General opined not to appeal against the High Court order.
The debris of the missing AirAsia jet spotted in the Java Sea. Indonesian officials say 40 bodies have been retrieved so far. 162 people were on board when the flight from Indonesia to Singapore vanished on Sunday.
And on the hour, with the Ranbaxy in the bag, Dilip Shanghvi takes himself into the top league of pharma. We take a look back at what has been a blockbuster year for the Sun Pharma chief. He's our newsmaker tonight.
And he gets there in style. Third boundary of the over. India finished things off. Off comes the stumps. It's a 3-0 win. And one would have to compliment MS Dhoni and his boys. Gone. Oh, that'll be it. India series is coming to it's come to an end.
You'll have to wait and watch. I'm strong enough, I'm not strong enough, you get the news.
He's dragged it on off the glove, onto the stumps. Edged and taken comfortably by the captain. What's happening to India in this post-lunch session? Nani. 3 in a row. Take there. Swinny the bet picks up 4. They've decided, thank you very much. You don't think we can get 4 wickets from here on?
At 27, most test wins as the captain, most test runs as a captain took India to the #1 spot in test cricket. Mahendra Singh Dhoni has undoubtedly been one of India's greatest captains, but his away record of just 6 victories will remain a blemish in an otherwise incredible resume. So it will be just 6 out of the 30 tests that he led India overseas.
A very interesting timing, the way that announcement came in while the team is still in Australia. Let's see, it's the end of the Dhoni era, at least in test cricket. Captain Cool is not going to be donning the whites ever again, and now it's new man in Virat Kohli leading the team from the front.
Mahendra Singh Dhoni deciding not to play the last test, retiring before the series is even over. India, of course, losing that series. Mahendra Singh Dhoni deciding to say goodbye to the purest form of cricket to concentrate on ODI and 2020. We'll get to that in just a bit. But first tonight, today's trading action. It seems like we're the only ones working through, another day of lackluster
So is the Indian cricket team. Not a problem then, Tara. Please carry on.
Lackluster trade on Dalal Street as the major indices clocked marginal gains on a day that saw very little volumes. Sensex gained, get this, only 7 points. That means the session ended pretty much where it all began. Same story playing out for the Nifty that went home just 2 points higher in a tight range is how it traded all through the day. Midcaps managed to outperform the blue chips marginally. That index gained over 60 points. Rupee.
All right, let's get you some market voices and what the opinion is on the street, what to expect from the markets over the next couple of weeks. Sanjay, that director at Quantum Securities, was not very bullish on India going into 2015, and Basant Maheshwari, founder of the Equity Desk and author of The Thoughtful Investor, who expects the next bull market to be led by housing finance companies.
I don't think we'll make new highs. In fact, I will not be surprised if we don't make new highs in 2015 also. Because, we've got to deal with our own problems, both in terms of macro issues, because today we're already seeing reality in terms of what the deficit is going to be like, what the revenue numbers are for the government, what needs to be done in terms of implementation, what needs to be done in terms of corporate profitability and balance sheets. So to forecast that we'll see a 8,700 or 8,900, it looks difficult right now unless something radical happens in the next 6 months, which transforms.
If you ever bought a sector leader in the Indian market, it was a challenge to have lost money. Had you bought ACC in 1992, in spite of all the Harshad Mehta boom, you would not have lost money. You would have recovered it back. Had you bought Infosys in 2000, you would have got your money back. Had you bought, say, L&T in 2007, so Nagarjuna Construction is still 80% below its highs, but L&T will still get your money back. So irrespective of what you do, if you can just focus in life that I'm just going to buy sector leaders, you'll do well.
Two experts take there on where Dalal Street is headed. From the equity markets to the currency markets, the rupee today fell to a fresh 2-week low on global risk aversion and dollar strength, but then recovered smartly on dollar selling by exporters booking quarter-end gains. The rupee finally ended the day at 63.38 to the dollar versus 63.66 yesterday, but it has to be said the US dollar is rallying against a basket of currencies.
All right, with that, let's now move to the top story of this evening. If you're planning to buy that dream car in the new year, you might have to get ready to shell out some extra cash. With the government under severe fiscal pressure, the reduced excise duty benefits to automakers may not be extended after they expire on the 31st of December. That's less than 24 hours away. In fact, news reports have been suggesting that the concessions are set to be withdrawn completely. This could prompt car makers to increase prices in the new year. Farah Bukwala Bora now joins in to explain the impact of this move. Farah, it was just now that the passenger car sector was trying to stage a comeback. Will it be a big letdown for Motown?
It's important for me to tell you about what kind of an excise duty cut we had seen in the interim budget this year. Now, if you see, we had seen the duty on small cars, scooters, motorcycles and commercial vehicles drop by about 4%. We've seen the excise duty on mid-sized cars, large cars and SUVs reduced by 4%, 3% and 6%. And of course, the auto sector is, substantially enjoyed the benefits of that. Now, coming to the question of impact on prices, according to analysts, we are likely to see car prices go up by anywhere between 8,000 to 20,000 rupees. What kind of an impact will this have on auto sales? There are two very contrarian views here. The first view says that it is likely to have a substantial impact on auto sales, given that the auto sector is still not out of the woods, and especially the entry-level segment is likely to see sales really plummet because it's an extremely price-sensitive band. The other view is that excise duty hike will not impact car sales, given that at this point the market is only seeing very serious buyers, and any kind of price hike is not likely to impact their decision. Now, analysts are also suggesting that it is important to take a slightly more long-term view. Over the next 6 to 12 months, there are likely to be several positive developments which will bode well for the auto sector. The easing of inflation will help in lead to interest rates being cut, and therefore EMIs might reduce. We are also likely to see the 7th pay commission being implemented, as well as the overall consumer confidence improving, and all of this should put more money into the hands of consumers. Auto companies may also pass on the benefits of lower crude and commodity prices to consumers. So it is important, and that is the view that analysts say, that it is important to take a slightly more long-term view. Back to you.
All right, Farah, thanks so much for that. Let's see how that plays out over the next 24 hours or so. Now, days after resolving the issue of spectrum swapping with the Defence Ministry, sources say that the Telecom Department is now all set to move for a cabinet approval as early as next month. The department is also finalising modalities for the upcoming 2G and 3G auctions, and it's hoping to finish both of these before the end of the financial year. Malvika Jain now joins in with the exclusive details. Malvika, this is so hugely important for the upcoming auctions. All of the industry has been maintaining that they need to get Defence to vacate spectrum if there is not to be any scarcity, artificial scarcity of spectrum. What is this breakthrough that you picked up?
Well, it has taken a while for the government to reach a consensus, and now the Department of Telecom is in the process of identifying a spectrum, a band which is going to be dedicatedly and specifically used by the Defence Forces. In the interim, it is likely that the Department of Telecommunications is going to move the cabinet as early as next week to seek its approval on this swapping mechanism, wherein 15 megahertz spectrum is going to be vacated by the Department of Defence. And this is going to be made use of for telecom services, and the Telecom Ministry is going to, in return, give it the dedicated spectrum bandwidth and airwaves. Now, once this is out of the way, the government is planning to auction 3G and 2G spectrum simultaneously in the month of February. The auction is likely to conclude by mid-March. And going forward, this is going to be something that is going to bring cheer to telecom companies like Bharti Airtel, Vodafone, Idea, and Reliance Communications, whose licenses are coming up for renewal, because like you were correctly pointing out, had the government not managed to reach a consensus, it would have been a make or break battle for many of these telecom companies whose licenses are coming up for renewal.
So finally, it has been happening, Malvika. I don't know for how many years we've been talking about the unused vacant spectrum lying with the Defence Ministry. We're going to go up for grabs. Thanks for joining us with that story. More news coming in from the policy space. In a bid to appease states that rely on manufacturing, the centre has announced a one-year grace period for the rollout of the goods and services tax. This move comes after states like West Bengal, Punjab and Tamil Nadu raised concerns over the potential loss of revenues. Sapna Das joining us on the phone line to get all that story. Sapna, will this be enough to get the states on board? Is this like an olive branch that is being, being passed on from the centre to the states? And could this also potentially delay the rollout of the GST?
Well, yes, there is a risk on both sides in the sense that the state's demand is basically that this one-year transition is not good enough, and this is on expected lines. They would like to be very sure before the GST rollout actually occurs, despite the bill being tabled by the Finance Minister in the Lok Sabha. And also in terms of, the actual GST rollout, see, it's all depending on the fact how quickly the centre is able to convince the Parliament and, muster a two-thirds majority in the upper house as well and get the bill tracking. Once that happens, we can be on safe ground and say that, yes, April 1, 2016 looks all right. But that means that they'll have to do it by the time the budget session ends. And that could actually get pushed sometime to month of May. So if you count 1 year from there, April 1 definitely looks, a bit ambitious. But the point here is that the centre has not really said that the April 1, 2016 timeline is not happening. But probably they have realized the risk, that's why they have not mentioned this timeline anywhere in the bill. All that they're saying is from the date of consent of the President on the bill, the state will get a 1 year transition phase. So they are doing it all in good intention, giving them enough time to, kind of spruce up their systems and, be in tune with GST. But yes, on both accounts, as you have rightly asked, the state's demand for a further extension of this transition phase, or either let the GST Council decide, and also in terms of the centre trying to meet the budget session timeline so that they are on schedule on April 1, 2016. Both are ambitious targets as of now. But we really can't assume that just because this 1 year transition phase has been given to states, which means that the centre is not serious about the April 1, 2016 deadline.
I guess, Sapna, all contingent on how seriously states start the transition. One can only hope that they don't wait for the bill to make its way through Parliament and the presidential signature and then start putting the back-end infrastructure in place. So all hopes that the timelines will be met and will remain in place. Thanks so much for that. Let's quickly move on to another story that we are tracking this evening. Will Vodafone continue to be taxed on share issuances for subsequent years? CNBC TV18 exclusively learns that the Mumbai transfer pricing arm of the Income Tax Department has sought clarity from the government on whether to go ahead with transfer pricing adjustments on Vodafone India for subsequent years. Prerna Barua is now joining in on this story. Prerna, this is very interesting because the Attorney General has already put forward his point of view and he didn't see the merit in pursuing this transfer pricing case further when the Bombay High Court ruled in favor of Vodafone. What is it that you're picking up now?
Well, definitely. The transfer pricing department has sought some clarity from the government on legal recourse in the Vodafone transfer pricing case. Sources have indicated to CNBC TV18 that the department has written to CBDT as it faces ambiguity over transfer pricing adjustments for subsequent years on Vodafone India services. Now, the TP department is yet to make adjustments on share issuances by Vodafone India services to Vodafone Teleservices Mauritius for assessment year 2011 and 2012. And remember, the transfer pricing officer can only raise additions to tax demand on Vodafone India before it gets time barred by January 31st of next year. Now, although it is unlikely that the government will take an adverse decision and file a special leave petition in the Supreme Court against the Bombay High Court's order, the transfer pricing department wants the government to clear the air as the Bombay High Court's ruling that was in favor of Vodafone will be binding and on all the subsequent transfer pricing orders if the tax department orders not to appeal.
So seeking clarity from the government, but just a reminder, viewers, Mukul Rohtgi, the Attorney General, has said it's not wise to appeal against the Bombay High Court at the Supreme Court, and it's not very often that you see the government go against the Attorney General. Thanks a lot, Prerna, for joining us with those details. Prime Minister Narendra Modi and his cabinet colleagues sat across the table with 25 industrial sectors yesterday to drop a detailed action plan for the manufacturing sector under the Make in India campaign. Recommendations from yesterday's meeting will be used to prepare Budget 2015. Ritu Parnabhiyan spoke to the Chief Architect of Make in India, the DIPP Secretary Amitabh Kant. Here's an excerpt of that conversation.
You know, when you manufacture not just for the domestic market. You may look at the domestic market initially. When all these auto manufacturers came into India, look at Suzuki, look at Hyundai, look at Toyota, look at Honda. All of them came into India looking at the domestic market. And India has today become the center for compact car manufacturing. They all look at the domestic market, but they all manufacture for the export markets as well. I mean, look at Hyundai. 48% of its production goes to 123 countries of the world, across the world. You know, what is the share of India in the global markets? It's just 1.7% of the global markets. Why should we not expand our share in the global export market? You know, when I was a young undersecretary in the Commerce Ministry, Mr. Abid Hussain was my Commerce Secretary, and he used to say that either you export or perish. And I believe, you know, that this is truly true for today as well. You know, I don't think we should allow any kind of export pessimism. We should not believe that we should perish rather than export. We must drive export with all vigor.
Amitabh Kant there on the big meeting that took place in the national capital. The Prime Minister was also apprised of all of the developments. PTR reports the Finance Ministry is proposing to remove certain regulatory hurdles coming in the way of foreign investors putting money into real estate investment trusts or REITs. Not one REIT has been listed in India despite the market regulator SEBI notifying the new investment structure back in September. Quoting sources, PTI says the Finance Ministry wants to align procedures with FEMA guidelines. The proposed relaxation is expected to help those entities which are registered and regulated under SEBI norms to access foreign investments via REITs. Sorry.
All right, moving on. As the government looks at setting up 100 smart cities, SEBI today proposed a new set of norms for listing and trading of municipal bonds on stock exchanges while channelizing household investments for urban infrastructure development as per the draft guidelines. The issuing authorities need to contribute at least 20% of the total project cost for which they wish to raise funds. This comes a day after the Prime Minister chaired a high-level meeting on smart cities.
Well, Rupee, the market participants might be on holiday, but that cannot be said for the market regulator. We've got more news coming in from SEBI. As decided in its last board meet, the market regulator has proposed new norms to reclassify promoters as public shareholders. As per the draft paper, an entity belonging to a promoter or a promoter group of listed companies may be reclassified its shareholding to the public category under 3 scenarios. 1, open offer. 2nd, separation agreement, and 3rd, if the promoter group shareholding falls to less than 5%. The new norms are expected to have a significant impact on the way M&A deals are structured, as well as in instances of corporate restructuring due to disputes among family members and promoters, or settlements that might be arrived at by rival corporates.
All right, and let's move on then to the ongoing SpiceJet crisis. Government officials say that the Airports Authority of India, or AAI, has asked the cash-strapped airline to deposit 200 crore rupees by tomorrow. We learned that SpiceJet has already submitted bank guarantees worth about 82.5 crore rupees. Earlier this month, AAI had threatened to put SpiceJet on cash-and-carry mode. The move has been spurred by the mounting dues that the airline has to still pay the AAI. Meanwhile, speaking with the media today, Civil Aviation Minister Ashok Gajapati Raju said that he wished SpiceJet well.
It is for them to get their books right. We wish them well, and we hope it will continue to serve Indian citizens and the Indian skies.
SpiceJet has the goodwill of the government, but the government's making it quite clear it's up to SpiceJet to get out of this mess. And this is our big global story tonight. Some concrete developments in the tragic crash of the AirAsia flight. Indonesian officials say some bodies from the crash have been recovered. The bodies were spotted along with debris floating in the Java Sea off the Indonesian part of Borneo. Officials have now confirmed the bodies and the debris is from the missing aircraft. The Airbus A320, remember, was carrying 162 people from Surabaya in Indonesia to Singapore. It had disappeared on Sunday.
And now on to the big story from the world of cricket. MS Dhoni has always played cricket according to his own rules, and perhaps it was apt that he ended it on his own terms as well. Indian cricket was rocked today by Dhoni's decision to retire from Test cricket moments after the Melbourne Test ended in a draw. Virat Kohli will now take over from Sydney. Let's recap a few dramatic hours in Indian cricket.
New player coming in, MS Dhoni, now coming to the crease.
He walked into bat with India struggling at 141 for 5. A test match defeat once again staring India in the face.
Mahendra Singh Dhoni typically counter-attacking.
Play the shot. The match is drawn.
But this time, MS Dhoni walked back unbeaten on 24 to the pavilion for the last time with the match safe. The Melbourne Test was drawn, but India had once again lost another overseas series.
We would we would accept the result of a draw as a fair result. The reason being, we were in a position of trouble, and from there to get out and get a draw is good enough, because definitely you don't really want to lose a test match.
And within minutes of that test getting over, MS Dhoni's test career was over. A BCCI release landed in the inbox of media houses. One of India's greatest test captains, under whose leadership India became the #1 team in the test rankings, MS Dhoni, has decided to retire from test cricket, citing the strain of playing all formats of cricket. MS Dhoni has chosen to retire from test cricket with immediate effect in order to concentrate on ODI and T20 formats.
I think he's been a fantastic player. Now he has decided to focus on the ODI and the T20 cricket. We welcome his step and I wish him good luck. His contribution is immense, and I believe he is going to win us the 2015 World Cup as well.
The announcement was sudden and dramatic, and in true MS Dhoni style. The boy from Jharkhand, who rose to become India's most successful captain, had always charted his own course in international cricket. From an unorthodox batting style to the ability to stay calm under pressure, Dhoni retires with 90 tests to his name and 4,876 runs with 6 centuries and 33 half-centuries. As captain, Dhoni played 60 tests and won 27 of them, 6 ahead of Sourav Ganguly. But where Dhoni the captain comes under scrutiny is his record overseas. He won just 6 tests abroad, and under him, India lost 6 overseas series in a row.
It's a whole new dynamic that he brought to Indian cricket. The Indian team was that much more dynamic under him. They were more aggressive. They were looking for wins. All those kinds of things that he brought into Indian cricket, and for that we have to be grateful.
The signs had been there for a while though. The wear and tear of a packed international calendar along with the IPL, where he was captain of Chennai Super Kings, was bound to take its toll. Dhoni in fact had hinted about it in an interview to CNN-IBN in 2011.
If you see 2015, still 3.5 years to go, and I don't really know, where I will stand. So, everything needs to go off well, and then by 2013 and I'll have to take a call whether I can really 100% be available for the 2015 World Cup.
Virat Kohli will step in to fill the breach from Sydney. In that sense, the transition is smooth, with Kohli captaining in Adelaide and showing a brave new approach. But the question that will continue to bother everyone: did one of India's greatest captains ever have to walk away in such a low-key manner? Digvijay Singh Deo, CNN-IBN.
Dhoni saying goodbye to the purest form of cricket. Well, what can we say except we wish him all the best, as well as, of course, Virat Kohli.
Absolutely. On that note, we'll wind up this edition of India Business Hour. Thank you so much for watching.
CNBC TV 18, celebrating 15 years of leadership.